Hello, welcome again to my rural development series. Today we'll be talking about financing of rural development projects. So our expectation is that you should be able to understand the meaning of financing as well as rural financing. They are two different concepts. So we're going to help us get an in-depth understanding of that. We are also going to be talking about the objective of promoting rural financing as well as indigenous self-help organizations involved in rural financing. We'll be explaining the rural savings and capital formation. We'll also be explaining the nature of the Nigerian rural financing system. Expectation is that you should be able to discuss this concept once we are finished with this. That will help you understand if you have gotten a grasp, if you understand the concept. Now, what is financing? Financing can be described as the raising of funds by individuals, non-government organizations, cooperatives, firms, government organizations, and so on for the day-to-day running and management of their business. As a discipline, finance is merely a body of facts, principles, and theories which deals with the raising and using of money for individuals, government, non-government organizations, firms, cooperative, and so on to accomplish their targeted goals. Meaning of rural finance. Rural financing encompasses the financial side of almost all economic processes of rural areas. This includes all that involves savings, financing, insurance of financial risk. Rural financial systems include all savings and financial opportunities, and thus the financial institutions which provide savings and financing opportunities, as well as valid norms and models of behaviors related to the financial system. Now, let's talk about objectives of promoting rural financing. Now, objectives of promoting rural financing according to MOBI 2006 is one, the first intermediate objective with direct effect on the target group is the development of accessible financial institutions. So once the financial institutions can be assessed, you are on the way. When we say accessibility, what do we mean? In this context, accessibility refers to the type of product or service, the business policies, and the location of the financial institutions. Can they be assessed? In those areas where there are no financial institutions, this secondary objective consists of building them up. So, in areas where rural financial institutions already exist, the objective is to motivate them and make them able to accept power segmentals of the populations as customers. Now, the second intermediate objectives, which is directly related to target groups, is to strengthen the efficiency, stability, and autonomy of those pre-existing and newly formed financial institutions, which are oriented towards target groups. Now, they must be trained on how to handle money and credit and learn how to contact the financial institution. Investment opportunities must be opened up for savings which already exists so that the savers may generate interest. Income generation and possible job creation investment which the target group previously could not finance should be made possible for them. Now, financial institutions are also to provide services in strict sense. For example, forms of business consultancy, these are services that they can provide, which introduces innovation and handles insurance and schemes or arrange contracts for insurance companies. Also, savings and credit opportunities are to be provided for self-help projects. Now, we've not exhausted the objective. The third objective, we just expatiated the second objective there. The third objective is that there are secondary objectives in promoting rural finance, which are only indirectly oriented towards the target groups. They are not direct to the extent that they do not involve any direct contact between the target groups as savers and borrowers and the financial institutions being promoted. The fourth objective of promoting rural finance is that one intermediate objective is the improvement in service in supply of financial services to the instrumental target groups. Many investments in small scale and medium scale in enterprises belonging to the proprietors who are not themselves members of the target groups are only feasible if there is a sufficient and inexpensive supply of credit. And then we have the fifth, objective. The last secondary objective of indirect relevance to the target group is the creation of linkage between informal financial institutions directly accessible to the target group and the formal financial infrastructure. The deposit of funds of an informal savings association in a bank, for example, could provide members with an indirect um, interest income, which savings association usually do not provide. Now, let's highlight some of the indigenous self-help organizations in rural financing. One, social clubs, age grades, youth clubs, religious organizations, development unions, um, cooperative associations. All these organizations are regarded as social organizations. What are rural savings and capital formation? What is involved in rural savings and capital formation? One, mobilization of savings is an important source of fund for lending in the rural sector. The rural communities, in most cases, have nothing to save since they do not even have enough to eat. So, the beginning of any serious discussion about savings and capital formation should center on working out a model whereby the funds from government, private, and urban uh, should be channeled to the rural areas first in order to stimulate internally generation of capital. Because if you don't generate, you can't save. If you don't have enough money, you can't save. So once this stimulation of internal generated capital is done, the major factor limiting the tapping of rural savings is the meager disposal of income. So they don't have any disposable income. All right. Okay. So because of low income and because of many investors run away from doing business in rural areas, the rural dwellers have not even formed the habit of saving. What they get, they consume. What they get, they consume. So savings institutions in the rural area could be stimulated by one, opening rural banks with savings facilities. Two, developing a savings borrower relationship. Three, adopting simple and convenient systems of servicing deposits. Four, insurance of deposits up to a certain level to promote public confidence in the system. Five, educating the rural people to improve their living conditions and to encourage them to use banking facilities. Six, encouraging rural banks to reinvest in greater proportion of their profit on the rural projects. Seven, creating an atmosphere of mutual confidence and trust between the bank and the community in which they operate. Now, some scholars have argued the advantage of rural development of rural financing could be. Let's highlight some of the advantages. One, rural financing can inculcate the habit of contribution, saving in the mind or into the members and depositors of finances in financial institutions. The inculcation of habit of contributing, habit of saving. Rural finance can help the rural dwellers to develop this habit. Number two, the accumulated savings deposits with banks could become collateral loans granted to members. Number three, enhancing the viability and liquidity position of the rural banks through deposit accumulation. Number four, reduction in the default rate. all right, the default rate as savings mobilization could be used to offer outstanding loans when the need arises. Number five, the transformation of informal to formal rural financial systems with all the benefits deniable therefrom. Now, what is the nature of the Nigerian rural financial system? The Nigerian rural sector can be said to consist of all the economic activities outside the urban community. Scholars have stated that rural settlements can be regarded as those whose population engage primarily in economic activities involving the direct and indirect exploitation of the land by undertaking crop production, animal husbandry, fishery, food processing, and cottage industry, including rural craft, mining, trading, and transportation system. Other scholars have explained that economic indicators show that about 70% of the population of Nigerians live in the rural areas, and most of them have been denied access to banking facilities. So, the objective of rural financing is to encourage banking habits among the rural population to provide services such as checks as instrument for payment, opening of letter for payment, opening of letter of credit, money transfer, advisory services, issues of drafts and collection of bills. Also, will help directly in fostering of productivity by offering borrowers a variety of technical services. So, considering the nature of rural financing in Nigeria, they are specialized institutions. Let's highlight some of them. The federal government of Nigeria has, at various times, decided to establish some specialized institutions to cater for the main banking needs of some segments of the society. All right. The banks which have been established to serve this purpose include community banks, which we call microfinance banks today, urban development banks, cooperative banks, as and so on. So the community banks, like we call them microfinance banks today, in Nigeria, they are defined as self-sustaining financial institutions owned and managed by communities or group of communities to provide financial services to their community. The body charges or charged with the duty of receiving and processing applications for establishment of community bank is the National Board for Community Banks. First community bank commenced operation in December 1990. Okay, now we also have another specialized institution called the Urban Development Bank. Several Nigerian cities experience problems of inadequate housing, transportation, electricity, and water supply. Now, the federal government have established the Urban Development Bank through Decree Decree number 51 of 1992. The Urban Development Bank, I think it has been reformed now, but let's just talk about it historically. The Urban Development Bank, therefore, was established to finance and foster the rapid development of urban and rural infrastructure through the Federation. Then we have the Cooperative Bank. The Cooperative Bank existed for a while and became defunct. But let's talk about how they existed and how and what they were into. It's a financial institution especially set up to offer greater access to savings and borrowing facilities for cooperative societies and their members at relatively cheap interest rates. A cooperative bank can be defined as a cooperative society carrying out business as other banks, but in such a manner that they fill the financial gaps created by the conservative financial practices of other commercial bank, money deposit banks, as we call them today. Cooperative Bank has undergone several transformations both in name and function. It was formerly Nigerian Agricultural and Cooperative Bank (NACB). Later, it was changed to the Nigerian Agricultural, Cooperative and Rural Development Bank, and now it has been changed to the Bank of Agriculture. So, thank you for listening. As I look forward to seeing you or hearing from you in my subsequent class.